Parimal, thank you very much for coming across and agreeing to share your insights with us. I know you run the Yadnya Investment Academy, which when I saw the website, there's some really good quality investor education videos there.
Thank
so
you.
Congratulations on that.
It's my pleasure that I'm here.
So from, I'm not necessarily asking you to lift off directly from those videos, but from a lot of the education initiatives that you are involved in,
Right.
if you could take us through some of the concepts that you have propagated to investors,
Okay.
which you think have really struck home and helped investors understand important concepts better than
Right.
what we would normally do by spewing out a lot of jargon.
Right.
That will be of really help. And what really piqued my interest is when you told me about this ROI versus RoNW.
Right.
Right. So what exactly is this ROI versus RoNW, and why is it relevant for an investor?
Thank you, Vijay. Actually, what is happening these days, people are focusing majorly on products and not processes.
Okay.
So return on investment is a product-based approach,
Correct.
and return on net worth is a concept, means your process-based approach. Means you should follow that. Like what is product? Somebody is coming to me and he says, "I want to invest 25 lakhs rupees," and which is a good fund these days.
Correct.
So typical problem. So I means the answer is all are good funds. So there is nothing like a good fund or bad fund. It depends on what is your time horizon.
Correct.
So normally return on investment approach, means product approach, is a partial approach. You are not taking the holistic approach in that.
Correct.
So in this particularly return on net worth, it's a holistic approach. You are means you should give some kind of goal to that investment or the time horizon to that investment. Now what people are doing, the biggest mistake is they are focusing 95% of their time on 5% of the investment. And remaining 95% investment, they are only focusing 5% attention.
Right.
And they are working like, now if suppose this 5% gives him 20% return, so effectively on the total net worth, it's only 1%.
Correct.
So what we always try and tell them, ki you should focus on your total 100 rupees, and that 100 rupees should grow at 10%, 12% or something like that. So it will make a huge impact to the total.
So what you're saying is that a lot of, especially in the retail level, a lot of investors come in and they may invest, let's say, 2 lakh or 3 lakh in equity markets.
Right.
But that may represent maybe 5% or 10%
Exactly,
of that.
exactly. And they forget about all other non-performing assets, which they are having. Like there are, say suppose you have 5 lakhs rupees in your account. And you will take a call of, say, suppose I'll put 25,000 rupees in this fund, in this stock or something like that. And then they will, 3-4 friends will be there. One of them will be a kind of, out of that pack, a wiser thing. So he'll say, "Oh, this is a good fund, you should invest in that." So these people will say, okay, I think he's a knowledgeable person. I'll go with him. And then what happens? After 4 months, 5 months, it doesn't perform. So what is this happening? Whenever I invest there, there are no returns on mutual funds. So then they will stamp that particular thing. So because this is a product approach, what they are focusing on.
Correct.
So that complete thing means what is the underlying asset they are holding, what are the objectives of that investment, they will know and never go into them. So that's why I always say that this product versus process approach means anybody can, the best approach should be whatever they are asking, you should attach that particular thing with a time horizon first. Then slowly you will take them to the goal, what goal they want to achieve.
But tell me one thing, Parimal, especially in today's hypercharged environment of exceptional returns, obviously a lot of investors have that product-led approach.
Right.
What is the next product I can invest in, which can give me the 40% that last year XYZ equity fund gave?
Right.
Now they come to you with these conversations, which product should I invest in?
Right.
They may not be in a mood to hear process.
Right.
They're in a mood to hear product and 40%.
Right.
How do you actually guide them into a process orientation when, suppose I'm coming in very clearly, looking for an answer, but I've asked you which product, you have to tell me XYZ equity fund.
Right. See, with this particular approach, you should start with them slowly. So these days a lot of advertisements are going on, mutual fund sahi hai and all those things. So at least they are getting a feel of that. So slowly start with them with a kind of fixed income kind of product, or debt fund or something like that, or short term fund or liquid fund, ultra short term fund. So slowly they will get into that. So once they will start seeing those returns, so the first graph should be a linear graph. The path should not be volatile. That volatility actually is dangerous for them. So normally, that's how. And plus, you should tell them that it is if you are doing an SIP and the returns are not there, example. So you should be happy about that particular thing, because see, law of averages will take place. Means I'm not talking about what kind of returns we are getting, but what kind of growth we are seeing in our economy, what kind of returns we can see is completely, there should be some premium on your fixed income securities, so that you will get. So we should tell them that their main focus should be on the trend, not on the path. So normally this path is more confusing for them. So slowly means they should get into some kind of, so now hopefully with this new ads, good ads, what we are seeing, at least people are getting feel of that. Earlier there was no feel of such particular thing. And plus invest education, like you people are doing, or mutual fund companies are doing, or something like that. So a lot of investment education thing is also happening, so which is helping them. So slowly they will get into that. And hopefully let us see how particular means, because I always say that to understand the actual risk profile, you need to have some kind of corrections. You need to see, like we have seen in 2008-10, we have seen in 11-12, we have seen in 15-16. So some things will be there. So slowly at least. So again, the answer will come to the same thing: a product versus process approach. So just they should focus on that particular thing.
So the bottom line question that an investor should focus on, like what you're saying, is, am I running after 20% on 5% of my portfolio, or should my goal be 10% on 100%?
So return on net worth. So 100%, that 100% should grow at 12%, rather than that 5% growing at 20% or something
or
like that.
20 or 25.
So we are getting a lot of coins these days, so you know that. So that focus should be on the complete net worth.
That's a very good question to ask an investor, which hopefully will get them aligned in the right way.
And I think these days, thanks to all you people, you are doing a lot of things for education, like investor education. So these things will definitely help them over the period.
So yeah, the needle has to be moved.
So that was the main reason why I'm kind of moving from wealth management towards investor education. This is the main reason behind that. We should reach to people, and they are giving great response to us.
Wonderful.
So let us see.
Excellent. Thank you so much for that, Parimal.
Yeah, thank you.